The US dollar made losses against the euro and pound in the first quarter, while generally recovering strength against the yen. Traders watched the NFP closely, particularly the exceptionally strong release for January, as well as inflation and central banks. While it now appears that inflation could start to fall faster than expected, it's still unlikely to reach the target of 2% in most major countries by the end of the year. Participants in markets widely expect the Fed to start cutting the funds rate from September. However, senior members of the Fed themselves remain adamant that there will be no pivot this year, even though they appeared to concede on the 3rd of May that a pause is possible. If participants start to see rates remaining higher for longer, there might be some recovery by the US dollar over the next few months. Equally, it's not very rare for central banks to surprise markets. Early in May, the RBA unexpectedly hiked its cash rate, citing inflation still at 7%. Other central banks in the UK, EU and possibly elsewhere might also need to hike rates further and keep them high to try to tackle inflation. The outlook for monetary policy can change rapidly. Staying on top of changes in expectations is likely to be the most important factor for navigating Forex this summer.